Welcome back, traders. I hope you're doing great. New year, new video, and I'm glad you're still here. And for the new ones, if you're new to my channel, like and subscribe so we can elevate to a new level in 2023. And now, let's dive straight into the charts. You're currently looking at the S&P 500 E-mini futures on the monthly chart. And as discussed last year, we're still rallying from the monthly order block right here, which consists of these two down close candles coupled with a fair value gap. You can see price perfectly respected this area and rallied higher. And in the month of December, we made a down close candle, and many traders asked me if we're still bullish on S&P 500. And of course, because on the lower time frames like the daily and weekly time frames, we have seen no long-term bearish signs, so we're still bullish. And this could be a potential bearish order block if we rally above and close above, and then we could use this level as an area of support, which takes us higher again. So we're still targeting the buy side liquidity, which rests above this high, or at least above these two highs, which are equal highs on the weekly time frame, which you will see in a minute. But first of all, I want to look with you at the S&P 500 index seasonality chart before we go into the weekly time frame. It's a new quarter, so let's take a look. You can see that in January, at the beginning, we rally higher, and we did already so. It's the 15th currently, and price has rallied already because this is the monthly candle of January. Then after somewhere in the middle of January, we decline, but this doesn't correspond with our analysis, so let's see how it plays out. But you can see a big rally from March going into May. This is definitely what I want to see occurring. Doesn't matter if we trade lower in January or then in February, but I want to see a rally higher this month above the buy side liquidity, and then maybe February we can see a sell-off coming in. Okay, finally arrived on the weekly time frame. You can see we're sitting at a very interesting level. We currently traded into the weekly bearish order block coupled with this volume imbalance, which could act as resistance and push price lower below the sell side liquidity right here. But because our higher time frame analysis on the monthly is that price is going to likely drive higher, we want to see a close above this volume imbalance so it can act for us as support to take price higher above the buy side liquidity. These are the equal highs which I mentioned on the monthly time frame, and we have another volume imbalance here. So next week I want to see a run above this volume imbalance and then a continuation higher above the buy side liquidity. And as you can see, we never broke below this mean threshold of this order block, which I mentioned last year all the time. We never closed below it. We only wicked 1, 2, 3 times, and then this week we rallied higher, showing that price wants to likely continue higher. Now we're on the daily time frame, and now let's take a quick look at last week's price action. So we can see that on Monday we had this big wick, and everybody thought we were going bearish, and I thought that too, until we created this fair value gap right here. So I marked it out and anticipated that price could eventually rally from here because of my higher time frame bullish analysis and bias. Coupled with that, we have a breaker right here, which I realize isn't a breaker on the S&P 500. But if you look on the Nasdaq chart, Nasdaq rallied below this low and which creates this candle a breaker, and Nasdaq rallied also from a fair value gap with the breaker. But you can see we rallied from this fair value gap on Tuesday, ran higher, created another imbalance on Wednesday, coupled with the Thursday candle, and now we closed above the fair value gap right here, which is outlined with these dotted lines, which creates this, as we closed, a balanced price range. You can see price dipped into it again with the wick. Didn't really come lower into this fair value gap. So it's left open and could be used as a level of support for next week. Or what I anticipate is that next week candles open. The next week candle opens and then we trade lower. And the open of the balanced price range should act as support to take price higher. If it doesn't do so, then I would anticipate a run lower into this fair value gap. But I definitely don't want to see a run back below this low, because look at all the sell side liquidity resting below these lows. Now you wonder what this green level is. This is just 50% of the wick. On the lower time frames, ICT uses this to take partials if you have a big wick. So price oftentimes can actually reverse once we reach 50% and then trade lower. So this would be a potential first target for the week. And after that, we have more buy side liquidity resting above these equal highs and potentially the monthly high right here. Now looking at the 4-hour chart, which transformed the daily levels onto the lower time frame charts. Here's the daily fair value gap, and you can see Tuesday traded into the daily breaker right here. Beautiful. Took out the sell side liquidity below this swing low and rallied and rallied higher. Then Thursday and Friday consolidated a little bit. And now, as you can see, we created a 4-hour order block, which has my interest as a level of support on Monday. We have also a tiny fair value gap right here from this low to the side of the candle. So we have two possible scenarios: a rally from the 4-hour order block coupled with a balanced price range, the open. Don't forget, this is the dotted line from the daily chart from the balanced price range. So first possibility, price drops, small retracement, and then trades higher. Or we have a bigger retracement, take all this liquidity below the lows, trade into the daily fair value gap, and then rally higher to take out the buy side liquidity. So now we're looking at the economic calendar, because we need to define the times and days on which we will see a high probability setup. Monday we have a bank holiday, so this means price could stay in a range and go nowhere and wait for Tuesday until the news release, which manipulates the range to the downside, preferably to then rally higher. On Tuesday I would wait for 9:30 a.m. On Wednesday we have a lot of high impact news releases, for example as core PPI, core retail sales. Here I would also just wait one more hour until 9:30 a.m. until the opening bell, so you don't get caught up in the manipulation as the news come out, and just preserve your capital. On Thursday and Friday it gets a little bit more quiet as compared to the previous 2 days, but there could occur a nice setup on Thursday at 9:30 again, or on Friday at 10 a.m. These will be my times where I will be monitoring the markets to look for a lower time frame setup, for example on the 15-minute chart, and my execution is always on the 1-minute till 5-minute charts. For the weekly range profile, I chose the classic Tuesday low of the week because of the fact that Monday is a bank holiday and could act as an Asian range, and then Tuesday manipulates the low with the high impact news release at 8:30, and then takes off higher until Thursday and Friday just consolidates. How to anticipate this template? Know the hard time frame discount arrays, we outlined them, and when the market fails to drop into that array, odds are Tuesday will likely see the drive lower, Tuesday London or New York session. So don't get confused if Monday doesn't drop into a discount array and rallies from there. Just wait for Tuesday and see what it offers you. And I would say this is it with this weekly outlook. It's a pleasure to me to read all these nice comments, and if you have any feedback, write them in the comment section below. Join my Telegram to stay connected on a daily basis. I always post my pre-market levels into the Telegram chat, and I would say we will see us in the next one. Have a great day, stay safe, trade safe.